computers now have primary control of critical vehicle functions.
All right, what's up, everybody? How's everyone doing? How's everyone feeling this afternoon here? Hey, the Daves, how you guys doing? Andy, how you doing? So today, I think a couple things that I'd say generally been requested across the board, or kind of just like comments that have been in the chat, just about like position sizing. I think a lot of people have been having questions about their position sizing, and then kind of variations of the different types of drawdown. I think that's a great starting point here for us, right? Focus on that position sizing element first, and then we can kind of build out and talk about how that impacts different drawdown types and like that. So talk about this a lot in the stream, or it's kind of a reoccurring topic that pops up every couple weeks. And the general consensus here, right, is that there is no objective best size or worst size, right? Every technique has their kind of own pros and cons, or every size has its own sort of pros and cons. And you can only really learn to take advantage of them if you have like a starting point of an honest conversation with yourself. So fundamentally, everyone has like a different number that breaks them. They have a different P&L number that, makes them lose their ability to maintain control, and then they overtrade or do something stupid or revenge trade or take opportunities or take plays that don't necessarily very neatly match what their trading plan is. And by focusing on being proactive with your position sizing, you can really counter a lot of those, we'll call it like negative symptoms that happen once you start trading a size that's too big for your current psychological skill level. So from like a DTR perspective, or the strategy that we trade, generally the objective here is to keep the risk to be like 10 points or less, right? So if I'm having 10 points and I'm trading a single NQ mini contract, then a typical or average DTR setup, if I'm wrong, it's going to cost me $200. My decision or my choice is to then either scale that up or scale that down, depending on what the like answers are to that honest conversation we talked about. Now, that conversation can be influenced by a million things. Your personal trading data should be a big part of that. But you also probably have an idea in your brain when you think back to your like worst trading days. What happened, right? What was the trade that when you look back on, you're like, oh, what a idiot I was. Why did I do this? Why did I execute this? Right? Why did XYZ happen? And if you can figure out what that number is, that then becomes sort of like your starting point for your max loss. We've already got two variables, right? We've got average position size, or average risk size on a DTR setup, which is approximately 10 points on NQ. And we know what the value is per contract, right? Or point value per contract on NQ. And so we can multiply that number by the average stop loss. So if we're, looking at our patterns, or we're looking at our trading history, and we notice that, okay, when I lose $150, all of a sudden I start to lose control, I start to overtrade, I start to feel desperate to make back that money. you know that you can't trade NQ, right? Because even a single contract on a average setup is going to put you over the edge or put you into an area where you're expected to go on tilt, or you have an evidence yeah, you've got a lot of evidence, right, that you do go on tilt if you hit that number. Then you have an opportunity to trade MNQ, right, the micros. So that will cut your risk by 400%, or you'll trim it down. So that will make things significantly easier for you to manage, potentially your psychology, give you a bit more flexibility. But that's, again, right, an honest conversation. Now, on the flip side, right, if you look at your trading history and you say, okay, when I lose $1,000, that's what puts me over the edge. Now you can think about maybe going 2 contracts, right, or even potentially 3, if you have that sort of kind of confidence in your ability to not push that line too aggressively. So your position sizing, right, is fundamentally a combination of 3 variables, right? It's your point value per contract, right? It's your average size loss, and it's what your personal psychological limits allow you to create. The challenging part about kind of deciding your position sizing or figuring out how many contracts you want to purchase is that your ego will try to trick you into making sizing decisions that you're basically not comfortable or confident in taking. So, you're going to think that, hey, I can lose $500, but when you actually look at your trading data, when you lose that 150 that we talked about, you get on tilt. So your ego is telling you one thing, right? But your actual trading history or your memory is telling you another. The paradox in that context, right, or one of the general paradoxes in trading, that the more money you try to make on each trade, the less money you end up making. And the way that that gets visualized in your position sizing is that if you trade sizing that's too big for your current skill level, you're going to close winning trades early, you're going to close losing trades late, effectively changing that, relationship that you want to have with your positions, right? You want to be closing your winners later, right? Trusting that your wins will stay wins and not trusting that your losses will become wins. So if you can size down your position and you can trade within your psychological level, then all of a sudden you unlock that mental capital that's required to actually execute that process. And as you start to, you know, build up more confidence in your strategy or your technique, then you're going to be getting, turning those 5 point wins into 10 point wins, and then 20 point wins, and then 30 point wins. And all of a sudden, you're making 3 or 4 times as much as you would had you been trading the risk you had at, say, like $500 a position. So fundamentally, position sizing starts with answering that question, or, being accountable to yourself over what that narrative becomes. From there, it becomes kind of like a pros and cons list depending on how much space you have in your prop firm account, your margin in your personal account, right? Or whatever liquidity requirements are for you to trade. So if you have a, prop account and you only have $500 of, drawdown left in your account, and you're risking $500 per trade, you're basically setting yourself up, right, to have an all or nothing decision. So even though your max loss that you think you can stomach is, let's say, $100 or $500, sorry, and your max loss is going to be $500 on this position, you're still setting up an environment where it's easy to go on tilt, easy to be stupid, because it's an all or nothing, right? So the pro of getting that is, yes, you might be able to build up a little bit more buffer, but the most likely con in that situation, right, is that you're probably going to go on tilt, you're going to lose access to your account, and you're effectively going to fire yourself from your ability to continue. So we have to find that correct balance, right? How can I size my positions to survive mistakes inside my, like, trading restrictions, right, that I'm dealing with? How can I manage my position sizing so that I'm staying within my psychological limits? And how can I basically reduce my sizing so I can focus on the quality of my technique and executing my positions with precision. Doesn't mean it's always going to be pretty, right? Doesn't mean it's always going to be easy. But the more you can focus on losing small and keeping that number well within your mental capital limits, easier it is to kind of slow down, take a breath, right? And not make each trading decision feel so personal. I think you guys have all seen, many times in my trading where I'll start the day off 0 for 1, 0 for 2, right? Sometimes even 0 for 3. And then I'll catch that 60-point win where all of a sudden everything has been completely wiped out, right? Or all the previous losses have been wiped out. That only happens not because I'm a good trader or because I'm like some super psychologically repressed individual who can just shut off their brain. It's because my position sizing is designed to keep me away from tilt as much as possible, right? So it's a proactive decision. If I want to have the mental capital by trade number 5, I need to be thinking about what that mental capital looks like with my position sizing, right? I need to be proactive, not reactive. So much of trading psychology is basically not tempting the worst parts of your yeah worst parts of your psychology, right? Like don't poke the bear type situation. And that's fundamentally always starting with the size of your stop loss and your position sizing, right? What that number equates to, that's always going to be the number one way to control how you behave. So to summarize, position sizing is relatively personal question, right? Because everyone's going to have a different reaction to each individual trade. And so it's your job to start that process. As a baseline or as a benchmark, your max loss per day should be kind of hovering around 1%, maybe 2% if you want to be really aggressive. If you're willing to risk 3 or 4% of your account on a daily basis, you're probably going to blow out or you're not going to find that consistency that you're looking for. So position sizing, right, will allow you to stay in the game for longer. And because you have such tremendous leverage with futures products and financial products in general, staying in the market for a long time is how you get paid and how you make big money. So the more you focus on those variables and focus on surviving and maximizing your mental capital, right? Your ability to like use all of it, the better your trading will go and the more money you'll make. So starting point for most people, right, should be between 1 to 2% of their account per day as a maximum. And then be honest with yourself and don't push the max limits. You have a higher probability of passing your eval, getting payouts, doing all those things that you're looking to do, the smaller your position sizing is. That makes sense. Everyone kind of understand what I'm talking about there. Any questions about that at all? Nice little 13-minute rant to start the session off. Perfect. So on the 50K, right? If your objective is to lose no more than 1% of your account or 2% of your account per trade, then 500 bucks, right, is that 1% number, right? So you don't want to be losing more than 500 bucks a day, not per trade. If you lose 1500 bucks in a day, you take 3 trades, that's a disastrous result on a 50K account, right? So you should be thinking, okay, I've got a 50K max loss I'm willing to take is, let's say, 1,000 bucks. Take 3 trades a day. You take 500 bucks risk per trade. No chance you're going to make that, right? What's your question about determining proper risk management? What is that? You find that as you continue, that number will grow for most people. So I think, yes, right? The more that you execute your technique and you build confidence in your strategy, it becomes muscle memory, right? And as you build good habits, you reinforce the ability to increase your position sizing. So let's say that, like the way to do that is to gamify it. So let's say that you size down because you're struggling and holding your winners, right? Let's say that's the thing that you've identified as a pain point in your trading. So you've been trading two contracts and now you switch to trading one. What you want to do now is gamify getting back to those two contracts, or to gamify going from one contract to two. Maybe you're going from micros to minis, for example, right? So the objective here is to find the thing that is basically the technical bottleneck in your trading, right? So in the example where we talked about you're closing your winners too early, that would be the thing to judge on, right? Is okay, I'm when I trade down to one contract, if I was to say I'm not closing my winning trades too early, what would I be doing? Okay, well, I'd probably be waiting for the candle to close. I'd be waiting to see what the reaction is post entry. I'd define what strength looks like, and then I would, write down what those characteristics are. So for me, right, post entry, it's I want to see strong candle shape, strong volume profile, hold higher highs or hold lower lows, just depending on the direction that I'm trading. If I get that, sweet, right? I've probably just held on for a bigger move than what I was doing previously with two contracts. And now I can say that objectively, I'm starting to get more and more follow through. As I get my average win now to be, let's say, two times bigger than my average loss, now I have a lot of buffer. I've got a lot of space. I've got a tremendous amount of margin for error. So you have like two things to gamify towards, right? You have the gamification of waiting for a more decisive moment to execute your position, right? Maybe closing as P&L is increasing, waiting till the candle closes, whatever bottleneck you think it is. And then you have the statistical confirmation, we'll call it, right? Of seeing your stats improve. When you do that for, let's say, 10 straight days or 5 straight days or 50 straight trades, and you see the evidence of that and you've proven to yourself that you can do it, now you've earned the right to trade larger sizing, right? You've proven that you can execute your concept or your technique on a kind of smaller proof of concept number. And you've proven that you can do it more than once. So it's not just a fluke. So now it's time to restart that process, restart that gamification, but change one variable and continue focusing. And that variable you change, right, is your position size. You go from one contract to two, or two to three, or three to four, or however many you want to trade. And you build up your tolerance and reinforce your technique every kind of step along the way. There's a couple Nautilus. I have a comment to make, Michael. I noticed in my DTR ORB indicator shows different levels than yours, even though I've updated the version. What I mean is the red line at the bottom and the top. So there's a couple of settings that it could be, right? What you might have here is you show these 2x profit targets, or you show these custom distances, right? So what I want to be doing, only using those show 2x profit targets. Excuse me. If for whatever reason your indicator ever goes out of sync, or settings look different, just go into the DTR website, click the indicator tab. So there's a thing that's called DTR indicator, and then just open up that new layout and then resave it. And that will always have my most up to date settings, or whatever settings you have or I have on my screen. Even something that you can do if you're interested in getting my notes that I write out here, or my pre-market plan. Once my prep is done for the day, right? Let's say at 9:30 in the morning, you can just go into the DTR indicator tab, relaunch that window, and you'll now have that updated trading plan visible on your screen as well. That makes sense? Yeah. All right, sweet. I passed my evaluation. Hey, amazing. Congratulations. And I'm now dealing with an intraday drawdown versus an end of day drawdown. How are they different other than the obvious? What are the cautions or things to look out for, etc.? So, the intraday drawdown, right, only exists during your buffer stage. Once you build your buffer, you go back to the same end of day drawdown that you had before. The main thing to focus on with that, right, is just understanding that your drawdown for your first 3% is going to be based on your high water mark. So your objective here is to not average into positions and then, close out for a small little win once you're profitable. You need to be focusing on closing as your P&L is increasing. So what it is effectively a filter for traders who are panic closing. We want to be making sure that people are closing at peak equity, maximizing their P&L potential. Once you clear that buffer, then you are payout eligible. You can do that in a single day or a single trade. So the trick is just to close as P&L is increasing. That's all you got to focus on. Once you close as your P&L is increasing, the intraday buffer will not be an issue. Make sense? Yeah. Well, stop loss is the same, right? Like you still have that 2000 or 3% of drawdown. You still have it, right? So it'll still eat into your drawdown the same way. So if you get stopped out, right, you'd lose say $200. It's the same in either scenario. You'll lose $200 worth of drawdown. Well, look, Nautilus, right? Like markets are not going to respect your strategy or rules every single day, right? So there's going to be days like today where we're 5 seconds from a candle close and then it reverses, and that happens multiple times. To now like panic and change my technique or to like try to outsmart it on a trade by trade basis, I'm not really trading at that point, right? I'm thinking that I can outsmart the market on evidence that I don't have. So at that point, right, I go from being a trader to being a gambler. If I'm, basically deploying ad hoc rules based on how I feel, it's really hard for me to execute any consistency in my technique because how I feel or how I perceive the market or how fair I think the market is not a real thought, or it's not a thought that is actually actionable most of the time, right? It's driven by emotion, or it's driven by fear, or it's driven by greed, driven by how well I slept last night, or how much exercise I've gotten, or whatever, right? So it's all about being consistent in your process, and being consistent in your process sucks when you're getting your butt kicked for a day, but we're not optimizing for a day's result, right? We're optimizing for the result after 10 days, 100 days, 1,000 days, right? 10 trades, 100 trades, 1,000 trades. So variance is going to show itself in a lot of cruel and miserable ways. Fundamentally, variance is random, and we have no perception over how it goes. This kind of goes back to the position sizing question or the position sizing discussion that we started the session off with, right? If you're taking 4 trades and by trade number 3, you're feeling like you want to break your rules or need to break your rules or need to change your process because you hate how much you've lost that day, that's a position sizing problem, right? That's confusing you into thinking that you need to change your technique to optimize for each and every variable. Don't need to do that. You need to be consistent in following your rules because all the evidence you have is that your rules work over that long sample size. And if you start to deviate away from that or change it on a case by case basis, you're now the gambler and not the trader. Yeah, surely. You're not going to be punished for closing a trade and then fictional P&L happening in the background. No, 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 no. That makes sense, Nautilus? And a 30-point move, not a big range, right, guys? We're already being extremely fundamentally conservative in the targets and size of trades that we're going for, right? So at some point, we have to stop, yeah, like minimizing the edge that we're trying to chase because that's just like a I don't know, a smart sounding way to try to get your average loss to be small. Up to you, Vince. I personally have 3 monitors, soon to have 4. One for my like charting, one for managing my stream, and then one where I have just a few other charts that I like to monitor throughout the day. No right or wrong answer there. It's whatever you find easiest for you, but you can replicate any trading view setup on D charts. What else? What other questions do we have here today, team? Many here so far. So what we got? Who wants to stack up a couple? What do we got? There's also a weird. Yeah, I feel like I feel this sometimes with my business. There's like a weird sensation of also like getting used to your new normal, right? So there's both like a period of time is as you adjust to your new version of you. There's like a period of conflict between, yeah, your past identity and the one that you're working towards. And with trading, you're constantly at odds with that. So there's, yeah, like it sounds counterintuitive, but you gotta start to find joy in being uncomfortable. I think that anxiety or that stress or like whatever it is, I think that's usually a sign that you're doing something good, like you're pushing yourself. So Dave, like I think your comment makes a lot of sense because you're doing something different that feels uncomfortable, takes a bit of time to get used to it. And then once you settle in, start to feel comfortable and confident again. And that's a big part of it. Yeah, fire away, Shirley. I'll do my best to answer as well as I can here. Yeah, we've said it before, Greg, right? Like what got you here in the first place is not what's going to get you to that next level, right? So that adaptation or that growing process is pretty uncomfortable. Yeah, it's really interesting how trading, yeah, it's very much you don't understand how psychological it is until you get into it. You think it's just yeah, blue shirts with white collars and yeah, secretaries wearing tight dresses or whatever it is. And it's all just psychological. So Shirley, do you see the option to activate your accounts inside your dashboard? So Dave, what you're missing is the confidence in your own setups. If not, Shirley, please screenshot it and send it to me. We'll take a look. So yeah, Dave, you need to start tracking data on the setups, right? That you trade outside of your hours. Decide if they're even worth it or not, right? Like if they're not adding any value to your trading, what's the point of taking them and like kind of slowing yourself down, right? Like my job, guys, when I first started trading, like when I worked for a fund, was trade execution. I was told what to do, how to do it, right? When to or what price to do it at. And my job was to beat that, right? So, like, I wasn't making decisions where I was taking on risk for a very, very long time in my trading career. And Dave, I mean, I've told you this before, and I've said this to people. But guys, if I thought I had an edge trading outside of the first like 90 minutes or the period I'm on the stream, I would continue to trade, right? It would make me more money. But once that momentum disappears, all my evidence indicates that my trades aren't that successful, right? So if we have all this evidence and we know that it's true, pretty easy fix to just not do that and go do something else with your life. Best days I have trading are the one and done days. Yeah, me too. But one and done's not always how it goes, right? So everyone's gonna have good days at work, like even in a normal day job. But most days aren't like that. So we gotta hope for the best, but plan for the worst. And if it starts to feel desperate, right, then you've got two numbers that break you. You've got a P&L number and a number of decisions. Thanks, Shirley. We'll take a look after this. Everyone has a different story and everyone's a different learning curve. I think the beautiful thing about trading is, I know for myself, I hope I'm trading to the very last day on earth, or at least last day I'm here. I think it's a skill for life. You're never too early or too late to start. What else we got here, team? Any other questions for me? Yeah, I mean, I haven't tried to trade Power Hour in a long time, but yeah, the last time I did a study, I had no evidence that I would make any more money. I think also a big part of it is trading is really mentally intense, right? So it's really hard to like be in that intense zone of focus and then stop and then get back into it, right? So I think there's a huge part of that. It's at least for me, it's too intense of a game to have to be wired on 10 hours a day for it. It's not super sustainable. So I'm definitely sharper when I really focus in on my kill zone. Power hour is the last hour of the day. I always think, Theo, that the more drawdown you have, the better, right? So 150K account gives you a lot more options than a 50K account, right? Because you know your odds of blowing an account trading one micro on a 150 versus one micro on a 50, your chance of blowing the 150 is probably like 300 times less. I don't quite know the math, right? But something along those lines. So you have more options or more flexibility the more drawdown you have. I think, and this is easy to say in hindsight, always. 'Cause I remember what it was like when I first started out. Like you always want to do things as fast as possible. But knowing what I know now, I wish I would have slowed down earlier. Um, yeah. Like trading is, yeah, like slow is smooth and smooth is fast, right? Like that's kind of what trading is. And yeah, the more drawdown you have, the easier it is to find that process or to find that slow is smooth, smooth is fast. So yeah, don't get too intimidated by the number you have to make. That's just like a limiting belief in your head. Focus on surviving in the market, building that confidence, really honing in on the quality of your technique, and everything else falls into place. Any other questions here, team? Any other questions? Anything else you guys want to go over? Well, fundamentally, to trade it, right, it's a different ticker. So it would be MNQ instead of NQ, right? So here it says, MQ, it would be MNQ. So that would be it. The correlation here is 1 to 1, but every now and then you'll see a slight discrepancy in the price. So this would be easier if I bring up a dual chart here. We'll go 5 minutes on both. So you'll see a little bit of a discrepancy here sometimes because it's overnight, right? So here you've got just a slight difference in price, and you'll sometimes see a slightly different version of volume, right? So I would use personally the minis for the volume readings, and then just adjust your stop loss and your reference price based on the difference. It should only be like maybe a point difference, maybe a point and a half. But yeah, take your volume from outlier, or sorry, from the minis, because there's more liquidity there, and so if a move happens, it'll happen here too. But that would really be the only difference. Well, just to keep your risk lower, right? So, uh, yeah, minis $20 a point, micros $5 a point, right? All right, guys. Final call for questions here. Final call for questions. Yes, Monday. Yes. Tomorrow I just got a log drive day, and then Sunday too. That's gonna be fun. I think we're gonna have like 40 or 50 people at this party. It's gonna be pretty much like a gigantic family reunion. It's gonna be awesome. All right, guys. Final call here. Final call. I appreciate you guys too. And thanks everyone for tuning in and make these group calls a lot of fun, right? I think we all look forward to them. But so yeah, really, really appreciate it. And all have yourselves a good trading day here tomorrow. And I'll do my best to get everyone, if I have any active tech issues, we'll get them solved here tonight. If not, or if something happens, tomorrow, they'll get solved Sunday. So please bear with me. You should have all, or we'll resolve everything here. So tomorrow's clean. And then if anything, again on Sunday night. Have yourselves a great weekend and a great trading day tomorrow, team. And I'll talk to you guys all really soon.